Inflation is ramping up to the highest levels we've seen since the 2008 crash, and it's making things very expensive. Like if you go shopping at Costco, the prices of things are shooting up, and fast food prices have been skyrocketing, and the prices of home and housing costs have been going through the roof. So if you want to know what's going on and how you can profit from all this inflation that we're seeing, make sure you watch this video until the end. What's up everybody, I am Jaspreet Singh from theminoritymindset.com, where money minds rethink rich. Between 2020 and 2021, countries around the world, including the United States, printed trillions and trillions of dollars. The whole purpose behind this money printing was to help stimulate the economy and give money to people and businesses when the whole world was shut down. Well, this kind of was a band-aid type of approach because that gave people a short-term solution to the problem, which was the whole economy was shut down. But now we are paying the price of all this money printing because this money printing caused the value of our dollars to be diluted, and now the prices of everything from your groceries to your housing to your food costs have been shooting up. Now, what you want to do is be financially educated and know what's going on and how you can profit from what's going on, which is what I'm going to be talking about in this video. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. And if you have not already, be sure to join our Guac Talk server on Discord. That way you can chat with other minority mindset thinkers. Our minority mindset chat room is completely free, and you can talk about the stock market, the real estate market, the cryptocurrency market, building wealth, and all other things minority mindset. So if you haven't joined the Minority Mindset's Guac Talk server, we call it Guac Talk because, as we all know, extra guac is a symbol of wealth. I got the link to how you can do that for free in the description below. Here's the agenda for today. First, we're gonna start talking about why we're seeing this massive inflation right now. Second, I'm gonna go over how you can profit from this massive inflation that we're seeing. And third, I'm going to be talking about the risks, because there are some risks to our economy with everything that we're seeing going on right now. So let's start with number one. Why are we seeing this massive inflation? When most people try to envision what inflation is, they think of the price of things going up. I go to buy extra guac, and now instead of me paying $2.50, I gotta pay $3.50. Or when I go to the Gucci store, instead of paying $600 for a purse, now I gotta pay $700 for a purse. But that's not exactly true. Inflation is actually when the value of your dollars get diluted. So you could think of it kind of like your money gets a demotion. Now this $20 bill doesn't have as much buying power, and so you need more dollars in order to buy the same things that you wanted before. You could think of it kind of like supply and demand. When you don't have a lot of dollars out there, the value of each dollar is a lot because there aren't that many dollars out there. But now, if you massively increase the supply of dollars and everybody has a lot of dollars, now the value of each dollar isn't as much because you have a massive supply of dollars. This is where things get a little bit complex, because you have to ask yourself, what value do dollars actually provide? Because at the end of the day, your dollars are really just a piece of paper. I mean, it costs 12 cents to print a $100 bill. See, the value that your dollars have don't actually come from the dollars themselves. The value that your dollars have come from the government, because the government has said that these dollars are our fiat currency, which means this is the thing that we can use to exchange to buy and sell things. That's a good thing because it makes it very easy to value things, because I can go to a store and I can see that this whiteboard is going to cost me $50, and it's very easy for me to understand what $50 is today, and so if I want to buy this, I can just give them $50. So that's the benefit of having this fiat currency. The downfall is the value of your dollars are kind of controlled by somebody who's not you. You don't get to control how many dollars are in circulation. And so let's say you have $100,000 in the bank. Well, the value of this $100,000 is really going to depend on how many dollars are in our economic circulation. If we have a ton of dollars in our economic circulation, the value of your $100,000 or the buying power of your $100,000 is not going to be as much as it would as if there were less dollars in the economic system. I'll show you what I mean. The reason why you started to see the price of things skyrocket in 2021 was because in 2020 and the early part of 2021, the government worked with the Federal Reserve Bank to print trillions of dollars, and this trillions of dollars were used to fund the stimulus programs, to fund bailouts, and just to help keep the economy rolling. So this was trillions of dollars of brand new money that was created by the government and the Federal Reserve Bank, and this money was injected into our economy. Now, this gave our economy a short-term benefit because a lot of people had a lot of money very quickly, but now you had all this extra money in circulation, and once it started to flow through circulation, the value of each dollar started to drop, which made the price of things, your groceries, your rent, food costs go up. So I got the CNBC article that's talking about Costco and the inflation that they're seeing in the prices of their goods. The CFO of Costco says, quote, inflationary factors are abound. The reason why he's saying that is because he's seeing higher labor costs, higher freight costs, higher transportation demand along with container shortage and portage delays. So you have the higher cost of all these things and a higher demand of goods, which is pushing the price of things up. And because of that, it is more expensive for you to go out and shop at Costco. But it's not just Costco. You're seeing this across the country at every single store, because every single store is having to pay more money for labor. They're having to pay more money for the cost of their goods. What's interesting about Costco is they fight to get the lowest prices on goods. That way they can give you an affordable price when you go and shop at Costco. And so they're facing a real kind of struggle here, because the cost of their items are going up, but they also don't want to raise the price of their goods for you too much. And so what they say is, like other companies, Costco wrestled with passing costs on the consumers, and they expect that they're going to see margin pressures, which means that as the price of things go up, their profit margins are going to shrink. So unless they raise the price of their goods, they're not going to be able to maintain their margins and have any more profit. Prior to 2020 and 2021, we were seeing an average inflation rate of about 2% a year. Now, it is going up way faster than that. Like Costco have seen their apparel items grow by 3 to 10% in just a year. What that means is if inflation stays like this, it is going to be harder and harder for people to survive, because people's wages are not growing by 3 to 10% a year, while the price of things are skyrocketing. So if your wages are not keeping up with the price of things, eventually we're going to hit a point where people cannot afford the cost of living. We're also seeing a major labor shortage, which is pushing the price of things up, because now if Costco wants to be able to sell their things, and this is not just Costco, I'm just giving Costco as an example, but if any store wants to sell their things, they have to have employees working there. Well, now the cost of these employees is skyrocketing, because not only are companies having to pay you a good wage, but now you're having to compete against unemployment, because there are a lot of people that are sitting on unemployment right now thinking, why would I go back to work and make less money working every single day when I can just sit at home and collect unemployment checks? And so this right here is a double-edged sword, because on one hand, people are going to say, well, that means the companies are not paying them enough, and so they need to get a decent wage, and so it's better for them to sit at home. But at the flip side, if you're sitting at home and you're being funded by the government, that means the government is having to print more money, which is causing more inflation, which is causing the price of things to go up, which is also pushing wage costs up too. Now, on one hand, this higher wage cost is a good thing because people are making more money, but on the flip side, if companies have to pay more money to sell their stuff and to make their stuff, that means the price of things are going to go up too. So it's a very kind of touchy situation with a lot of different issues at one time. The interesting thing about this is companies are getting smart too, because they know that the price of everything is going up. And if the price of everything is going up, then people are naturally going to have less money to buy their things. So what companies have been doing is making the size of the products smaller, so you get less things for the same price as before. So the whole concept of companies selling you less stuff for the same price as before is called shrinkflation. And the Washington Post did a really good write-up on this, where they talked about many different companies that are doing this right now. Because now if you go shopping, you might be getting a lighter bag of food, you might be getting a smaller can of drinks, you might be getting thinner rolls of paper, and all these things are on purpose. That way they can get you less stuff for the same price. That way it doesn't feel like you're paying more money, because businesses understand that consumers are going to have higher grocery bills, so they're just selling you less stuff at the same price as before. So what's happening? Well, the price of everything is going up. The price of labor is skyrocketing. The price of our goods is skyrocketing. And so what's happening is the price of your groceries and the price of everything is going up. And on top of that, when you go shopping, you can buy something and get less of it. So things are getting more expensive because of all the money printing that we've been seeing. And this brings me to number 2. How do you make money because of what's happening? Now, the way that you profit from this type of inflation is first by converting the money that you do have into an asset that will grow in value because of this inflation. The whole idea here is we live in a country that runs on dollars. And so if the value of our dollars are dropping, you want to convert your dollars into something else that is not dropping in value, something that at least maintains its value. So as the value of dollars drop, the price of the asset that you own is going up, or at least maintaining its value even as dollars drop. So if this thing is maintaining its value, it's going to cost more money to buy it in the future because the value of dollars are dropping, and you want to own this asset right now before it gets more expensive. Now, before I go over a few examples, I do want to let you know that if you are interested in learning more about things like this, money management and investing, we have a free guide on money management and investing that you can read for free when you subscribe to our free daily newsletter. So if you want to learn more and see how you can start building your wealth and investing your money the right way, I got the link to how you can download our free guide in the description below. I'm going to start with my personal favorite. So my favorite way to go about this is by investing your money into real estate. And the reason why I like real estate is because when you invest your money into real estate, you own something real, something physical, something tangible. This is something that you can see, feel, and touch, and even as you wait, you can get paid. I'll show you what I mean. So if you go out and you buy a home, and this is going to be a home now for you to live in. This is going to be an investment property, a rental property. So now you're going to buy this home, and what you're going to do instead of you living there is you're going to rent out this home to somebody else. So you find this nice couple right here. This person has a beautiful mustache, and this lady over here has a beautiful braid, or as we like to call it in my native language, Punjabi, a gut. You find this couple, you move them into your home, and now they start paying you $1,000 a month, every single month, just for living in your property. So now you own a physical asset, and you're getting cash flow for owning the asset. Here's where things get interesting, especially if we're talking about inflation. So the thing that everybody pays attention to is the value of your home. Let's say you bought this home for $100,000. If you continue to see more inflation, if home prices keep going up, then maybe in the future, this home will be worth $150,000. But when I invest in real estate, I don't really care about this. What I'm paying attention to is this right here, this cash flow. Because now what you got to understand here is when you buy this property, you've just also built a brand new stream of income. And the stream of income is passive if you do it the right way. Because now this tenant is living in there and they're going to pay you every month for living in your property. You don't got to go to work every single day to get this paycheck, and you don't really have to do much work to manage this property if you hire a good property management company. But what they're doing is they're living in your property and they're going to pay you this $1,000 every single month just for living in your property. And if you do this correctly, this $1,000 that you're getting every single month is going to cover your property taxes. It's going to cover your property insurance. It's going to cover your maintenance, your mortgage, and all of your other fees, and put some money in your pocket every single month. So you're getting this $1,000 check every single month. You use this money to pay all of your bills and put some money in your pocket. And now, if inflation happens, guess what else is going to happen? Rent in this area is going to go up from $1,000 a month to $1,200 a month. So guess what happens? Over the years, you can also raise your rent to $1,200 a month, because as time goes on and if you continue to see inflation, housing costs are going to continue to go up, which means the rent money that you're going to make is also going to go up. So if you own real estate investments, you're getting this cash flow, and if inflation happens, you also get to increase your rent because the price of everything else is going up. And if home values go up too, you also get this, but this is just the icing on the cake. When you're investing in real estate, I don't want you to make your investment decisions based off of this. I want you to make your investment decisions based off of this, because if a property is profitable here, which means it's paying off all your bills and it's putting some money in your pocket every single month, well now, even if home prices crash, you'll be okay because your property is profitable. This is what I want you to pay attention to. And I know buying real estate is not like a walk in the park. You got to learn how to deal with property managers, tenants, contractors, attorneys, and everything in between. So there is more work involved to buy real estate, but it can be a very good tool for you to beat inflation because you get the cash flow and you also get the hard asset. The second way that you can profit from this inflation is just by owning some of the companies that are now selling products. Because as companies have to charge more money, they're going to see bigger revenues, assuming people keep buying their products because the price of the products are higher. And so now if you are the owner of this company, well, now you're benefiting from inflation because the company that you're invested in is making bigger revenues. Now that might not mean that they're selling a whole lot more products. They're just making bigger revenues because the prices of their things have to go up. And so you as an investor want to be on the producer side of things, the one that's selling the products, not just the consumer that's having to buy the products. This is what financial education is all about. You don't want to just be the consumer, you also want to be the producer, because the producer is the one that's making the money. When you invest in stocks, you are buying a piece of ownership in a company. So if you go out and you buy one share of McDonald's or Lululemon or Chipotle or Amazon or Tesla or whatever company you want, you become one of the owners of these companies. Now with one share, you don't get to tell the company what to do, but you do get to share in the profits when the company makes more money. So if you go out and you start investing in some of your favorite companies, and now you own some of these companies and you see more inflation happen and they're having to raise the price of their products because their costs are going up so that way they can maintain their margins and people keep buying their products, well now you're going to be on the winning side of things, because now you're not just the one that's buying all these more expensive things. You own the thing, you own the company that's selling these products, And if a company is seeing growing revenues, generally you will see its stock price going up. The third thing that you can do is invest in commodities. This would be something like gold. Now, this is different than your other investments because when you invest in gold, you're not buying something that is creating more value. Because when you invest in real estate, you're investing in something that's creating value because you have just created a home for somebody. Somebody is living there, they want to use your property, they're going to pay you rent for doing that. And if you own this property in a great area, the property is going to become more valuable because there's going to be more demand for that property. Same with stocks. If you go out and you invest in Amazon or Apple or Lululemon or Chipotle, these companies are working very hard to create new products, to sell products, and to give more value to consumers. That way they can be more valuable. Gold, on the other hand, is a little bit different. Gold doesn't really do much. When you buy physical gold, it just sits there and looks back at you. So it's not creating more value. When you're buying gold, you're buying it really just as a store of value, because you can't just print gold the way you can our dollars. So if you're really worried about the value of our dollars dropping, then you can buy physical commodities like gold kind of as a hedge against that inflation, because now you own something which is a real representation of value, because gold, in order to get it, you have to physically mine to get this gold. So it takes labor to get this gold, which is what you're buying when you own a bar of gold. Now, if you want my personal opinion, this is not financial advice, just my personal opinion, I wouldn't worry about buying physical gold until you have other investments set up. I want you to get your cash flow set up. I want you to have other investments and really build your wealth. That way you have passive income, you have cash flow, that way you can live your life the way you want. And now, when you're really worried about preserving the value of your wealth and your dollars, that's when you can buy some gold, because your gold that you have is not going to earn you any cash flow. It's not going to pay you any dividends, and it's not creating more value. So I'd rather you invest your money as you're trying to build your wealth into something that's building more value, instead of just buying something that's trying to just preserve its value. And the last thing that I want to mention on this is cryptocurrency, because as we all know, cryptocurrency has been very popular recently. Now, cryptocurrency has a lot of speculation. It has a lot of people that are trading the market, which makes cryptocurrency very volatile. And so if we talk about just as a protection against inflation, cryptocurrency does have its place, because the whole idea behind cryptocurrency, especially things like Bitcoin, is you cannot create more of this coin out of thin air. It has to be mined. It takes work to do that. And so that's what gives these coins value. But there's a lot more to cryptocurrency than that, because there's more value behind the blockchain. There's more value behind the usability of cryptocurrency, which makes it kind of hard to evaluate just as a currency. And so if you want to put some money into cryptocurrency, that's fine. But I want you to understand that there's more to cryptocurrency than just trading it for a quick buck. There's a lot of future potential behind it, and I'm not going to get into all of that in this video. The thing that I just want you to understand about cryptocurrency is, if you're worried about this inflation happening, I want you to own some of the other things that I talked about, and this can be one of your kind of subsidiary things I want you to own too, because yes, there's a lot of future behind this, but there's a lot of speculation in that too, and I want you to have some for sure things that can protect you, instead of just trying to bet on something and hoping you hit the right coin. And this brings me to the third thing that I want to talk about, which is the risks associated with everything going on in our market and our economy right now. If you've been paying attention to the financial news in any way, shape, or form, chances are you've heard people talk about a potential housing market bubble, a potential stock market bubble, and a potential economic bubble that's brewing. The whole idea behind that is you have all this money that's been printed, causing this new inflation that's going on, and at the same time, people have a lot of money right now. People are still living off of some stimulus checks. People are still getting these unemployment checks. And on top of that, a lot of people are not having to pay their mortgages because of this mortgage forbearance program. And people are not having to pay their student loans because of the student loan forbearance program. So people have extra money every single month, and people are using this money to invest. People are using this money to put it in the market. People are using this money to go out and spend, and eventually this is going to come to an end. Eventually, we're going to get to the point where people are not going to be able to put their mortgages and student loans on forbearance anymore, and so people are going to have to start making their mortgage payments, and so people are going to have to start making the student loan payments again. When that happens, people are going to have less disposable cash to go out and buy things, to go out and shop, and to put more money into the market. And so when people have less money in their pockets and their hands, you're going to have less people who have money to go out and invest, and less people who have money to go out and just spend money. And so now, if we hit that point and the prices of things are way up here and the amount of money that people have is way down here, you're going to see a discrepancy. It's going to be harder for people to go out and just shop, which means companies might start making less money. And if at that time as well, interest rates also go up, it's going to be less attractive for people to go out and buy a home, which could bring housing prices back down. So the thing that I want you to understand about this is not that you shouldn't put your money into these assets and to invest your money because there's a risk of a correction or a potential crash in the future, is that I want you to to understand the risks associated with it. Because yeah, there are risks associated. Yeah, there's a chance that we could see a market crash happen, but nobody knows when that could happen, and nobody knows how big it will be. So what I want you to do is when you make your investment decisions today, make sure you're not investing more than you're willing to lose. Because yeah, there's a chance things come down, but when things come down, what I want you to do then is just come in and buy more. Because when asset prices come down, it is a discounted price for you to come in and invest your money. So yeah, there is risks associated with it, okay? There's no ifs, ands, or buts about that. But what I want you to understand is what the risks are and make sure you make your investment decisions accordingly. If you enjoyed this video, here's the video on building wealth that I think you'll love. And while you're at it, download a free money management PDF. And as always, keep hustling. But in the long run, what really affects the stock's price is its fundamentals. That's how much money is the company making, how are their profits looking, are their revenues growing, are their profits growing, how is the management, and are they innovating for the future? So these are the things that really affect the company's stock price over the long term.